Hi everyone. It's mightily frustrating when you try and invest in shares with a perfectly sound rationale only to see your strategy unfurl, and so it transpired over the last couple of weeks, and especially today when commodity-based shares like miners and oil have crashed and burned. Today is the 6th of July 2021 and a slow slide in these shares has just increased into a wider, sharper sell-off. But why? What's happened? Well, in this quick video we'll find out. I'm Anthony and as always, we're talking money. Okay, commodity-heavy portfolios suffered severely in the markets today, and our little Talking Money portfolio lost over 2% in the last hour of trading alone. We were doing so well, up 6% after month 1, up 12% by the middle of month 2, and now we're back to square one in month 3. Rescued actually only by a purchase of a non-commodity based share, that with hindsight looks like a stroke of genius. But sadly, the other shares such as Rio Tinto, Evraz, Sylvania Platinum, Central Asian Metals, Forexpo, all commodity based, are pirouetting with my stop loss limits, and further falls will surely trigger them. Anyway, why? What's happened to question my sanity here? Well, 3 things, and if there is a blessing out of all this, at least there is a reason. Firstly, the dollar strengthened, which is counter to the prevailing trend against the pound, euro and other currencies. If you were to go on holiday, you would notice that the pound is buying a lot more now than it did, say, a couple of years ago. Anyway, commodities that are priced in dollars become less attractive if the dollar itself goes up in value. Now, the rationale for a falling dollar comes in the guise of inflation ticking up. At least this was the rationale back in April when we set up our little Talking Money portfolio. Since then, inflation has indeed gone up. The dollar depreciated and commodities went up, and so did the shares in those commodities. Hey presto, we look like investment gods. But now the dollar is strengthening again. All of the above goes into reverse. There is one reason why the dollar is strengthening, and that is because bond markets and the Fed and lots of people are thinking that inflation in America is a sort of transitory effect. It's not going to last forever, and therefore the dollar is strengthening on the back of that. And also the American economy is picking up quite nicely after the pandemic. The second reason is the OPEC oil cartel. And to be frank, it's not really a cartel anymore, since its power had been greatly diminished as more producers like the US, UK, Russia fall outside OPEC's orbit. But that said, OPEC still includes 15 big oil producers like Saudi Arabia, UAE, Kuwait, Iraq, Venezuela, etc. So what they say still has an impact. Earlier in the month, it seemed increasingly likely that a spat between Saudi Arabia and UAE would derail an increase in supply, which in turn would lower prices. But without a resolution, there's a great uncertainty as to what will happen to the group's total output. This in turn leads to a higher volatility, which in markets is akin to higher risk. And so it comes to pass that a stronger dollar and a market ripe for volatility, traders have taken the opportunity to do some widespread profit taking of oil and commodities in general that have profited so well over the last few months. The third thing that spooked the markets today, especially in London, as if we needed something else, was a report from the Office of Budget Responsibility that stated that the UK debt pile is likely to continue and would be more exposed to the risk of inflation and consequently higher interest rates. So what does all this mean going forward? Well, if you can tell me what the direction of the dollar is going to be and what OPEC is going to do, then fantastic. After all, the dollar may weaken further and OPEC may come to some agreement. Volatility will subside, but who knows? All I can do is look at our current portfolio and apply the stop loss strategy that I put in place, either by selling after a trailing stop loss has been triggered, or the share price dips below a long moving average, say the 200-day trailing moving average, which is a popular selling strategy too, and try to protect capital as best I can. You may well have some views of your own, and I would love you to share them with us in the comments section so that we can all sort of chip in and have a discussion about it. But that was today. Tomorrow, as they say, is another day, and we'll see what happens then. I'm Anthony, and as always, we're talking money. But until the next video, bye for now.